I want to take a step back and just close out a few things,
Oh, sure. Okay.
To get through it, like some of the points that we wrote on our notes were actually pretty good. And I'm glad we got into the health insurance, and I'm glad that we got into
if we want to retire early. Yes.
Making sure that our liability is correct with our car, but also cash flow is king. Listen, folks, don't start getting into debt. And if you're in debt in retirement, it's going to be really hard to get out. So that should be your first issue, is making sure you don't have debt. Now I'm going to get into the mortgage, because there's a big topic there. It's going to people are going to want to hear what I have to say about that.
Right.
So like the issue of cranking out and making sure you put enough money away into your 401k, folks, my recommendation is always put in the maximum to get the match. To get the match. And if you're maxing out your 401k, whether it's 24,500 or 31,000, if you're older than 50 is the catch up, you want to make sure that you're not putting too much in there and not enough in your personal savings, because your savings and your cash flow are the two of the most important things in retirement, because something's going to happen. You're going to need a new air conditioner. You're going to need a new roof. They still happen in retirement. And then the question is, well, then what if I just downsize and I rent? Well, the key is, like, even if you have a long-term care, you claim you want to have home health care. You don't want to be taken out of your environment. You want to stay in your environment that you're enjoying. And,
of course.
And be prepared that these things happen. So we recommend 6 months to a year's worth of money on the side. And don't overfund your 401k if you don't have enough cash. Pay off your debt, keep enough money on the side, and monitor how much you put into your 401k. But our goal is to always get clients to maximize the match, right? So if I got to put in 6% to get 5, then put in 6. Now, Social Security is a huge, huge part of your income. You don't think it is, but it is. And the reason why it is because if you look at the dollar amount, say you're making $100,000 a year, 150, up to 150 or 160 is what you pay payroll tax on. So,
okay, gotcha.
Yeah. So, the average person's going to get at least $3,000 a month at age 65 or 67, whenever you retire. And that $3,000 a month, $36,000 a year is like having $1 million in the bank, because when you look at sustainable withdrawal rates of what you can sustain an income from, it's 3.5% to 4%. And when I had my dad on, I said, "Hey, what's going on with your 401k or your IRA right now, or your defined benefit plan that you started?" Well, he's having to take out 6 to 8 to 10% as he gets older. So, you're going to break that sustainable withdrawal rate. Well, that doesn't happen with Social Security, because they give you increases with cost of livings.
Okay.
And it's like having $1 million in the bank. So you really want to focus on the last 10 quarters of what they're going to look at to maximize your Social Security benefits. It's going to be a number that's going to come into play that's going to take a lot of pressure off you. Okay.
All right.
Crush the high interest. Yeah. Crush the high interest debt. Do not have credit card debt. And if you have it, do not go back into it again. If you do, you're going to keep working, because you're never going to get out of it if you stop working. It's too hard. There's too many things that are going on in retirement. You got to worry about IRMA. You got to worry about Medicare Part B cost, which is IRMA, and the surcharges. You've got to worry about how much can I take out of my Social Security, or how much can I earn if I'm still working, taking Social Security too. And the answer to that question is full. For most of us that are listening, it's almost 67, is full retirement annuity is what they call it, FRA.
Okay.
And so FRA, you can make whatever you want to make. I had a guy that was a truck driver that called. He's probably listening. He listens to me in his truck while he's driving.
That's
and
great.
he thought he couldn't take his Social Security out until he was like 70, because he said he didn't want to have to, give some of it back while he was working. I said, today's your lucky day. Because you're going to go and then call me after you get your Social Security income, and we'll talk about where to save it. All right. But you're going to go get your, I said, how much is it? He says, it's $3,000 a month, but I don't want to lose it while I was working, because I can only make a certain amount of money. I said, not at your age, sir. He was 68 years old. So at 67, you can get as much as you want. You can make as much as you want. They're not going to reduce your Social Security income, and you should take it. People say, well, I'm going to defer it to age 70. Well, from 67 to 70 is 3 years, right? Well, you look at putting away $3,000 a month for 3 years without interest. You're looking, and I've said this before on the show, it's over $100,000. you're going to be 11 to 12 to 13 years before you're going to get that $100,000 back by getting the extra money by waiting to age 70. So, folks, take the money off the table, okay? Now, one other thing, Jackie, that is it's more than a financial goal. It's a lifestyle change, okay? So think about what your
if you
days
retire
are going
early.
to. Yeah, you know,
Yes.
will you travel, volunteer, maybe start a new hobby? You know, will you make the transition into something more fulfilling when you're not working anymore? So remember, everyone's situation is different. It's always a good idea to talk to somebody like us that can help you create a personalized retirement plan, because it's too hard. There's too many things going on. So we can do this and work together as a team to take the pressure off of you, okay? Now, one of the things that people ask me all the time is, you know, paying off my mortgage. Should I pay off my mortgage? And here's some statistics.
Okay.
Paying off your mortgage before retirement can, you know, that could be a big relief on your budget. So it's, again, though the money becomes the workers, you're now the retiree, and your money is the one that's working now. Okay.
Right.
So you want to take as much pressure off that money as you can. So not having a mortgage could take a lot of pressure off that money because
Sure.
you don't have to pay for it. Now, that's a lifestyle issue. Let's talk about financial issues. According to paying off your mortgage before retirement can be a relief significant financial burden, but it isn't always the best choice, according to the Federal Reserve. Mortgage debt amongst older Americans has grown by more than 35% since 2007. So, does it make sense to pay off your mortgage prior to retirement? Now,
Well, not if you're going to just dip into your IRA to pay it off.
well, you're not going to do that because you're going to have to pay taxes on that money. So you're not getting 100% of the money when you pull it out. Does that,
Well, we need to go over that. I think that people think that's my big goal, is to have this mortgage paid
it's
off
the biggest goal. Is everyone says that to me. I want to pay off my mortgage. I don't want to have any debt.
at any cost.
So your mortgage is 2.8 to 3.2%. 2.8 to 3.2%. So the question is there any investments that you can put money into that can pay you on a guaranteed basis more than 2.8 to 3%? And the
Golly,
answer
I
is
hope
and
so.
Their answer is yes. You know, you go
Yeah.
look at CDs even. I mean, I'm not going to invest. I don't invest in CDs for my clients.
We're not
but-
advocating that necessarily.
No, I'm not advocating any of that. But think about that. If you're paying 2.8, let's use 3%, and you get to now deduct that, it's not 3% anymore, is it?
No.
So, and if you can make more than 3%, then that's called leverage. And that's going to bring in the life insurance policy conversation.
Oh, good.
And that's what it's about. It's about
Okay.
leverage. And what do wealthy people do? Do wealthy people put all their money in their 401k and max it out?
No.
They have a lot of real estate. In fact, this young listener that we're meeting on Monday, he's like, I don't care. Everyone keeps telling me to max out my IRA and max out my 401k and max out. And I have a SEP IRA on him, you know, because it's
Right.
he had some money that he needed to invest. So we put it into a SEP. And I said, you know, I don't think that's the best thing to do. He goes, Bruce, I'm so glad you said that because everybody's telling me to do this. And, you know, you could put up to like $68,000 into a SEP IRA. And I said, no. I said, no. He goes, no, I want to build, and he's a young guy. He says, I want to build a real estate portfolio. And he has his own business. That's what wealthy people do. They have their own
That's right.
businesses. And if you don't have your own business, you be a good investor, have some IRAs. I mean, we help people with that all the time. But focus your income from having the real estate and investment property. Now, if you don't have the ability to manage that because you're a little bit older, there are several companies out there that will manage them for you. You know, like when somebody calls at 10 o'clock at night that their toilet's broken, they have services, and you pay them usually about 10% of your rental income to provide management on those properties. And they're much easier to use. You don't even get involved. You hand it to them and bye-bye. Now, I need to find a really good one because I've worked with a few of them, but I haven't made any really good relationships with property management companies, but I need to do that. Because most of the people I work with, they manage their own properties, and a lot of them are really handy, and they go and fix everything. And maybe they only have 3 of them. But think about this. when you own real estate, I was a real estate major. Jackie, did you know I was a real estate major at Arizona State?
I did know that at ASU.
Yeah. That was my favorite class was real estate finance. I learned how to use an HP 12C Hewlett Packard calculator, and now I have it on my phone. It's an app. Okay. I finally lost it after 20 years. This calculator that was like, it was like the only thing in college that I really learned, other than how to party at ASU, which was fun, by the way. And I met my wife there, right?
Yeah, it's a good thing.
It was really fun. But utilizing real estate as a strategy is a great idea. And build maybe a little portfolio. And you can even use leverage. You can use more. You can get a little mortgage on that too. Got to save the money. How do I save the money? That's where my life insurance comes in. Life insurance, most people say you can invest it elsewhere and make more money than life insurance. I totally agree with that. It's not an investment. It's a savings plan. Okay. And it doesn't really make earnings or interest in life insurance until you've been in the policy for over 10 years. But there are ways to overfund those insurance policies to build your savings up sooner. It's not about making the money. It's about putting it someplace that doesn't have any risk. And it's asset protected. So I like to use the leverage portion of a life insurance too to provide the down payment to real estate. Now we got a lot of tax things going on. Let's explore that, okay? Because that's what people are going to want to know, Jackie.
Premier Southwest Planning Group, LLC is a registered investment advisor. The content of this advertisement is intended for informational purposes only and is not intended to be investment advice. The views expressed in this program are subject to change based on market and other conditions.